Hi, good morning everybody. This is lecture 1 for week 2, Monday 25th of October. Supposed to start at 8 o'clock in the morning. Okay, this is still in topic 1. Remember the last thing that I have covered in the lecture in the previous lecture is about the difference between management accounting and financial accounting. So I hope you have some ideas about financial accounting. The focus of this topic 1, 2, 3, 4, 5, and 6 is on the financial accounting. So now you just focus on financial accounting. Just to refresh your memory, this financial accounting can be defined. The simple definition is the process to record, to analyze and record financial business transaction and to report financial information. So financial accounting is the type of accounting that you can use to record business transaction, and at the end of the year you can calculate profit or loss. That is the simple definition for financial accounting. When you want to do financial accounting, the financial accounting works is depending on the types and forms of business. The basic idea is, if the business is small and simple, then the financial accounting work that have to be done is small and simple. If a business is big and complex, then the accounting record that you have to make is also big and complex. Okay, so it is important for you to know the types and form of business ownership. Okay, let's see. Types of businesses. There are many businesses out there. If you go to a town, you will see many businesses, and these businesses can be categorized into several types. There are 3 types of businesses. First is service business, second is merchandising business, and the third type of business is called manufacturing business. So let's see what is a service business. The simple definition for service business is a business that does not sell anything but provide services. The simple example for a service business is like a laundry shop. If you have a laundry shop, you do not sell anything, but you provide laundry service. Customers will come to your laundry shop. You provide the laundry service, and the customer will pay you for the service. You do not sell anything. Okay, see here, there are other examples of service businesses. These are mostly Malaysian example. The first example is Astro. In Malaysia, we have Astro. It provides Um, it provides entertainment service. So if I subscribe to Astro service, I will receive many TV channels, news channels, channels for children, channels for documentaries, channels for news, channels for movies, etc. Okay, another example is Malaysian Airlines. Malaysian Airlines provide airline service. We also have AirAsia. AirAsia also provide airline service or transportation service. Hotels provide hospitality and lodging service. Bank. In Malaysia, our biggest bank is Maybank, Malaysian banking. Malaysian banking. So it provides financial services. For also in Malaysia, we have Maxis. Maxis is a telecommunication company. So it provides telecommunication services. These companies does not sell anything, does not sell product, but they provide services. That's why they are categorized as service business. Okay, the second type of business is called merchandising business. The simple definition for merchandising business is a business that sells something. A business that purchases finished product from supplier and sell the same product to customers. The simple definition for a merchandising business is a grocery shop or a supermarket. This grocery shop and supermarket, they purchase finished product from supplier and sell the same thing to customer. They purchase bread, sugar, rice, and sell the same thing or product to customer. Okay, other examples that that you can see here is Tesco. Tesco is a supermarket chain in Malaysia. There are many Tesco supermarket in Malaysia. So this is an example of a merchandising business. Tesco, they purchase finished product from supplier, maybe from factories, and sell the same thing to customer. They charge higher price so that they can get profit. Sangheng, we have Sangheng in Malaysia. This company, they sell electronics appliances. So they purchase the electronics appliances or product from supplier and sell the same thing to customer. Reject shop. Amazon.com is an international example. Amazon.com, they purchase finished product and sell the same product to customer. Okay, the third type of business that you have to know is called manufacturing business. Remember this. A business is categorized as manufacturing business if it purchase raw material, process the raw material, and produce and sell finished product or finished goods. So if a business purchase raw material, process the raw material, and then sell finished product to customer, then we call this business as a manufacturing business. These businesses that we call as manufacturing businesses, they have factories. They have factories. The example here that we can see is General Motor Corporation. it is an American company. General Motors produces cars, trucks, and van. They have factories. They purchase raw material or components from supplier, and then they process the raw material and components, and then they sell finished product that are cars, trucks, and vans, etc. Samsung is a producer of cell phones. So it is a manufacturing business. Samsung company, they purchase raw material and components from supplier, and then they process these things and produces finished product. So this company is called a manufacturing business. Dell Incorporated, Nike, the Coca-Cola Company, and Sony Corporation. These are all manufacturing businesses. So if you see these categories, this type of businesses, you can see that a service business is simpler compared to a merchandising business. A service business is simpler because it does not produce anything. It does not sell anything, but it provides services only. But a merchandising business is simpler compared to a manufacturing business. This is because a merchandising business purchase finished product and sell the same product to customer. Manufacturing business is always a complex business because there are many processes happen in a manufacturing business. A manufacturing business is a business that purchase raw material and components maybe, and then this business will process the raw material and components and will sell finished product to customers. So they are complex. So you can see that given that a service business is the simplest business, then the accounting record for a service business is a simple record. It's simple. It's simpler compared to a merchandising business. And then accounting record for a merchandising business is simpler compared to accounting record for a manufacturing business. And also you can see here, accounting record for a manufacturing business is more complex compared to accounting record for a merchandising business. Because the business is complex, then the accounting record is also complex. Okay. Businesses also can be categorized according to the ownership. Businesses can be categorized according to who owns the business. Okay, according to the ownership, businesses out there can be categorized into 4 categories. Actually, 3 main categories. Okay, the first category is called sole proprietorship. The second category is called partnership, and the third category is called companies or corporation. This is categories that we have in Malaysia. Maybe in your country like China, Indonesia, or other places, other countries, maybe they have a slightly different ownership of a business. But in Malaysia, we have this. We have 3 main categories of businesses according to their ownership: sole proprietorship, partnership, and companies. Okay, let's see what is a sole proprietorship. Okay, a sole proprietorship is a business owned by one person. If you go to town in Malaysia, you see many businesses. And if a business is owned by one person, then you call that business as a sole proprietorship business. A sole proprietorship business mostly are small businesses. The typical example is laundry shop, grocery shop, small restaurant. What else? That is most about it. So if you go to a shop in Malaysia and you see the shop is run by one person, is owned by one person, then we call it a sole proprietorship business. A sole proprietorship business has several advantages. The main advantage is it is very easy to start a small, it is very easy to start a sole proprietorship business. I think in Malaysia now you can start the business in one day. Very easy. You just need to register the business and then you can start doing the business. The second advantage is if the business makes profit, all the profit will go to the owner's pocket. Let's say you are a Malaysian and then you want to start a sole proprietorship business. So the advantage is very fast. You can go to register your business in one day. I think you can get the registration done, and then after that, if you start the business, if the business is making profit, then all the profit will go into your pocket, and nobody can take it because that business is owned by only you, one person. But sole proprietorship business has also has several disadvantages. Okay, the main disadvantage is it is limited to financial resources of the owner. A sole proprietorship business is owned by one person, so the capital of the business is typically small because the capital is the amount that can be provided or can be invested by only one person. And the second disadvantage of a sole proprietorship business is if the business is making loss, only one person has to bear all the loss. So that is the disadvantage. There are several more. If you read the textbook, you will see there are several more advantages and disadvantages. Most of the time, sole proprietorship businesses are small businesses. Okay, the second type of business according to ownership is called partnership. Okay, in Malaysia we have partnership. A partnership is a business owned by several individuals. In Malaysia, the number is 2% to 40%, if I'm not mistaken. So this business are typically formed by professionals like architects, accountants, lawyers. They always start a partnership business. Several lawyers they are together and like to do a business, then they form a partnership business. Same goes to doctors also, architects. So the main advantage of starting a partnership business is you can combine the skills and resources of more than one person. Maybe there are 3 persons One is good in operation, one is good in marketing, another one is good in financing, in finance or accounting. Then these three person together they start a business, start a partnership business. The good thing about this kind of business is they can share skills, and they can share their skills, and also they can share their resources. Let's say one person has $10,000, so three persons they have $30,000 to run the business, to start the business. So it is good. But there are several disadvantages of starting a partnership business. The first one is if the business is making profit, then the profit has to be shared among the partners. So let's say a partnership business has three partners, then the profit of the business has to be shared by these three partners. You have to divide the profit into three, so each person will get a small amount. And another disadvantage of starting a partnership is in Malaysia, if one partner exit the partnership business, then the business has to be registered again. To start, it is like to start the process from the beginning. They have to register again the partnership. So it is a bit difficult. And another one is like partnership is owned by several individuals. So when it takes a longer time for this kind of business to make business decision. Let's say the business want to decide whether to open a new branch or not. So it takes time because these three partners have to meet, to do meetings, to discuss, etc. So it takes time. Compared to a sole proprietorship business, a sole proprietorship business is a business owned by one person. Business decision can be made very quickly because only one person own the business, so he or she can make business decision very quickly. Partnership, when they want to make a business decision, they have to do discussion, to do meetings, everybody has to agree, etc. Then they can make the business decision, so it takes a bit longer time. Okay, see here the comparison between sole proprietorship and partnership that in Malaysia. Okay, see here, member. For a sole proprietorship, the business is owned by one person only. Okay, for partnership in Malaysia, the last time I checked the law, partnership business can be owned by two or more partners, but less than 20. Okay, not more than 20. Capital contribution. So proprietorship business, the capital is limited to amount contributed by the owner, which is a single person. But for a partnership, the capital can be bigger because all partners can contribute capital into the business. Liability. So proprietorship is unlimited liability. Partnership also is an unlimited liability business. Unlimited liability means something like this. If the business borrow money from banks, then and then the business, let's say, having problem and cannot pay back the loan to the bank. So what happen is bank can take the asset of the business, and also bank can take the personal asset of the owners of the business. That's why we call it unlimited liability. Let's say the situation is like this. Let's say at one time in the future, you start a sole proprietorship business in Malaysia, and then your business has has to borrow money from bank. After several months, your business is not good, so it having problem. It cannot pay the bank loan. What happen is the bank can take the asset of the business, and if the asset of the business is not sufficient to cover the bank loan, the bank also can take your personal asset, your car, your house, your land, your cash. That is called unlimited liability. Okay, number 4. Same goes to partnership. Sorry. Number 3, same goes to partnership. If you have a partnership business in Malaysia, and then your business is having problem, cannot pay back bank loan, bank can take the asset of the business, and also bank can take the personal asset of the partners. That is not easy. Okay, so number 4, in Malaysia, sole proprietorship has no specific act or law, but partnership is under the Partnership Act of 1961. This act explains about how to calculate, how to distribute the profit, and also what are the responsibilities of each partner, if I'm not mistaken, the number of partners, etc. So partnership has this thing, Partnership Act 1961. Any problem happen in the partnership, you can refer to this Partnership Act 1961. It is a law. Number 5, legislation. Legislation, sole proprietorship, and partnership. Okay. The thing is like this. If you start a sole proprietorship business, or you start a partnership business in Malaysia, these two types of business, they are not legal entity. So when it is not legal entity, the thing is like this. If somebody sue your business, it means that the person sue the owner of the business, because the business is not a legal entity. So that is what we call, what we say as sole proprietorship and partnership. They are not legal, not a legal entity. When somebody sue the business, the sole proprietorship business or partnership business, the owner of the business, it means that the person sue the owner of the business, because the business is not a legal entity. If the business is a legal entity, then when a person sue the business, then the person bring the business to the court. That is a legal entity. And also, sole proprietorship and partnership business, they are not a legal entity, so that they cannot purchase asset using their name. When these two type of businesses want to purchase asset, the business has to use the owner's name. The business cannot use the business name. Okay, so agreement. Number 6. Sole proprietorship, there is no need for written agreement, because the business is owned by one person. Okay, but partnership, a partnership is owned by several persons. So when the business is started, all these partners, they have to sign a partnership agreement. This agreement this agreement contains everything related to the partnership. How much is each partner contribute to the business, how to divide the profit, how to divide the loss, and all things related to the partnership. And number 7, the types of businesses. Let's see. So proprietorship mostly are small businesses because they are owned by one person. So they are very typically are small businesses. For example, laundry shop, mini market, grocery shop, small restaurant, etc. Partnership, like I said earlier, most of the time, professionals will form partnership when they want to start a business. Several accountants, they get together and then they start a business. We call it accounting firm or audit firm. Lawyers, several lawyers start a business. They start a partnership business. Doctors, architects, engineers, most of the time in Malaysia they start a partnership business. Okay, the third category of business that we have in Malaysia is called company. In Malaysia, we have basically two types of companies. Okay, I will explain about this. Okay, the definition of a company. A company is a business owned by shareholders. That is the simple definition for a company. A company is a business owned by shareholders. A company is a separate legal and taxable entity. A company is a legal entity. It means that if you start a company in Malaysia, the business is a legal entity. If somebody sue the business, it means that the person will bring the business to the court. It is not the owner of the business will go to the court. The business will go to the court. The name of the business will appear in the court case. For example, Michael Johnson versus XYZ company of Malaysia. It can happen like that. The person sue the business, not the owner of the business. Let's say, remember, a company is owned by the shareholders. If the company is sued by somebody, the shareholders are not sued by the person. The person sue the company. The company itself is a legal entity. It can be sued, and also it can sue people or other parties in court. And also, a company is a taxable entity. It means that the company has to pay tax. If you start a company in Malaysia, your business has to pay tax, company's tax every year, or corporate tax every year. But if you start a sole proprietorship business or partnership business, the business do not have to pay tax every year, but the owner of the business will have to pay personal income tax. But for a company, the business has to pay tax every year. The owner of the business will get return from their shares, dividends, etc. Maybe they have to pay tax for that income, dividend income, etc. Maybe they have to pay tax, but the company itself has to pay tax, company's tax or corporate tax every year. Okay, see this, the first point in this notes: legal bodies to own assets, make credit, sign contracts, suit, and to be sued by court. Like I said earlier, a company is a legal entity. A company, it is a legal entity so that it can own assets. It can purchase assets using its name, using the company's name, and can make borrowing, bank loan using its own name, the company's name, can sign contract, and can be sued and to be sued by court. Okay. A company is set up for the purpose of increasing the shareholders' wealth, to make profit for the shareholders. So basically, a company is owned by the shareholders. When a company needs more capital, the company will issue or sell shares to the public, to the people. So most of the time, a company can accumulate a big amount of capital compared to sole proprietorship and partnership, because the company can sell shares, can issue shares. Most of the time, a company is a big business. So in Malaysia, the business like AirAsia, Petronas, Malaysian Airlines, Astro, Maxis, Maybank, they are all companies. They are big businesses. Why they are big businesses? Because they can get big capital from issuing or selling shares. So in Malaysia, we have two types of companies: public limited companies and private limited companies. Public limited companies is called syarikat berhad in Malaysia. Private limited companies are called syarikat sendirian berhad. Okay, see the differences between public limited company and private limited company. Public limited company, it is a business. Minimum number of shareholders is 2. Maximum number of shareholders are unlimited. Maximum number of shareholders is unlimited. The example is, we have Petronas in Malaysia. It is a public limited company. The number of shareholders of Petronas can be unlimited. Minimum 2, but can be unlimited. Petronas can issue shares or sell shares to anybody at any time, so the number of shareholders are unlimited. Private limited company, on the other hand, the minimum number of shareholders is 2. Maximum is 50. It is a company. So, but you can see the private limited company is a smaller company. The maximum number of shareholders is only 50. But public limited company, the number of shareholders is unlimited. Okay, so issue of shares. Public limited company, when the company want to issue or sell shares, they can offer to the public. But private limited company, when they want to sell shares, they cannot offer to the public. They can offer only to a limited number of people. Listing requirement. So a public limited company can be listed in Bursa Malaysia, in stock exchange in Malaysia. But private limited company in Malaysia, they are not listed in stock exchange. Number 4, financial information or financial statement. Public limited company, they have to publish or show their financial statement to everybody, to the public. But private limited company, they don't have, it is not compulsory for them to show their financial statement to the public, but they have to show it to their shareholders. if they have 50 shareholders, then they have to show the financial statement to these 50 shareholders only. They are not, it is not compulsory for them to show their financial statement to the public. Managing. Who manage the companies? Okay, so remember, a company is a business owned by shareholders. The shareholders minimum is 2, and it can be more. For a public company, the number of shareholders is unlimited. So most of the time, these shareholders contribute capital, but they will appoint a professional to manage and run the business. Shareholders is it is not necessary for shareholders to manage the company. No, they contribute capital, they buy shares, but they most of the time they hire professional managers to run the business, to manage the business. That is for public limited company. But for private limited company, most of the time, remember, private limited companies, the number of shareholders is small, less than 50, maximum 50. So most of the time, for a private limited company, the company is run by both shareholders and by the professional managers. Most of the time, a private limited company is a family business. Several family members, they form a private limited company. So all the family members can own some shares. When they want to run the business, they will the family members will manage the business, and sometimes they also hire professional or other people to also run or manage the business. Liability. Okay, for companies, both public limited company and private limited companies in Malaysia, they are limited liability business. Limited liability business means that the business can borrow money from bank. If something happen, if problem happen, the business having problem to pay back the bank loan, then bank can take the business asset only. Bank cannot take the shareholders asset, personal asset. Okay, let's say in the future, you purchase shares of a public company in Malaysia. So when you purchase shares in a public company in Malaysia, you are one of the owner of the public company. But something bad happened, the business is having problem, the business cannot pay back bank loan. The thing that will happen is bank can take the asset of the company. But if the asset is not sufficient yet to cover the bank loan, bank cannot take your asset. Bank cannot take your car, cannot take your cash, cannot take your house, etc. That is what we call as limited liability company. The liability is limited to the business asset only. Okay, and the last one is the examples. In Malaysia, we have many public companies. I think we have around 1,000 public companies in Malaysia, maybe more. When I look at the Bursa Malaysia, the Malaysian Stock Exchange, I think in Malaysia now we have like around 1,000 companies, maybe more. So these are the examples are Petronas. We have Petronas, AirAsia, Malaysian Airlines system, Axiata, many more. There are 1,000, I think around 1,000 companies. When you look at for public limited company, at the end of the name of the company, we have BHD. BHD means Berhad or limited. So you know that it is a public limited company. Private limited companies, there are many private limited companies in Malaysia, but and if you look at the name of the company, they have SDN BHD, Sendirian Berhad or private limited. Private limited. So, okay, these are the difference. So now, it is like this. A sole proprietorship business, most of the time, is a small business and simple. Partnership business is a bigger business and a bit complex because it owns by several partners. Companies, most of the time, are big businesses and they are very complex because they are owned by many shareholders. Okay, so then you can see that sole proprietorship business, it is a simple business, like I said. So the accounting record for a sole proprietorship business is very simple. A partnership business is a bit bigger business, so the accounting record for partnership is a bit difficult, a bit complex. But accounting record and process for companies are very complex and very difficult because companies are big businesses. So in this course, you will learn how to do accounting record for a sole proprietorship service business. And this course is a introductory course. So you will learn very simple or very basic accounting record. You will learn about how to do accounting record for a sole proprietorship business, which is most of the time a small business, and service business. So service business is the simplest business. That is the thing that you will learn in this course. Thank you very much. This is the end of the lecture. You have to write your name and matric number in the comment section. I will take that as the lecture attendance for today.